All right. So we're going to go ahead and get started. Again, thank you for everyone coming today for today's tools and tips for navigating DeFi through Moonbeam Ignite. We have an amazing panel today. My name is Jay. I'm the business developer over at Beamswap. And with us, we also have Luke from Moonwell, TP from Bifrost, Aziz from StellSwap, and Ben from HydraDX. How's everyone doing today?
Doing great.
Amazing.
All good. All good.
Very well, thank you.
So before we get started, I would love to just kind of give everybody an opportunity here to go ahead and introduce themselves. So let's go ahead and start from Luke from Moonwell. Tell us a little bit about yourself and tell us a little bit about Moonwell for people that may be unfamiliar with Moonwell.
Thanks, Jay. Good morning. It's great to be here. So my name is Luke, and I'm a contributor to the Moonwell protocol. Moonwell is a decentralized lending and borrowing protocol. So basically, we allow you to borrow against crypto or digital assets that you already have. We're live on Moonbeam and Moonriver networks, and also Base L2. So if you have crypto on Moonbeam, for example, DOT that you brought over from the Relay chain as part of the crowd loan or the big unlock, sorry, you can go ahead and borrow against your DOT, and you can borrow stable coins or you can borrow other crypto assets. So excited to be here and talk about some tools and tips, tricks of the trade. Thanks.
Awesome. Thank you so much, Luke. Really appreciate that. Next, I'm going to go ahead and kick it over to Aziz from StellaSwap. Tell us a little bit about yourself, Aziz, and tell us a little bit about StellaSwap.
Hey, thanks. Great to be here as well. Hope everyone's doing fine. My name's Aziz. I'm one of the co-founders of StellaSwap. So basically, StellaSwap is a hybrid DEX on Moonbeam, native on Moonbeam, that features like three kinds of AMM under the hood, right? Which is a standard AMM like Curve, a standard AMM, stable AMM like Curve, and a recently launched concentrated liquidity AMM. The whole purpose of having various AMMs within the hood, under the hood, is to facilitate like the most optimal price discovery for our assets on Moonbeam. We're proud to be the leading DEX, not only on Moonbeam, but also on Polkadot in terms of total trading volume, daily trading volume. And yeah, as a user, you could trade any. We support a lot of parachain assets and project assets on Moonbeam, on EVM, that allows you to trade easily with low slippage, as well as you can find staking opportunities for you to make your capital work. Yeah, so that's about it.
Awesome. Thank you, Aziz. Really appreciate that. Next, let's go ahead and kick it over to TP to talk about himself and a little bit about himself and Bifrost.
Sure. Hey guys, it's really nice to be on this Moonbeam call, and nice to have the strategic partners on the call as well, with obviously Stella, Beamswap, Hydra, and Luke from Moonwell. I head BD and strategy at Bifrost, and Bifrost is a dedicated liquid staking protocol. It's built on Substrate. It's powered by Polkadot, and we've recently been quite active on the Moonbeam ecosystem with the recent unlock, where we've launched both XCV and XC pools on both Stellar and Beamswap, and we've launched the one and only XCV Glimmer and Glimmer pool on Beamswap. So yeah, really happy to be here, and I look forward to talking about these tools.
Thank you so much, TP, and we look forward to diving in a little bit more and talking about some of these tips. Also, we have Ben from HydraDX. Go ahead and introduce yourself, Ben, and tell us a little bit about HydraDX.
Hey guys, so I'm Ben, or Lol McShiz. I'm the ecosystem lead at HydraDX. Now, if you don't know, HydraDX is another parachain on Polkadot. It's a next-gen decentralized exchange, or DEX, which is designed to facilitate super capitally efficient swaps between assets. So our key product is the Omni Pool, which puts all assets into a single pool, which helps to unlock unparalleled efficiencies through providing single-sided liquidity. Now, this was sort of like our initial Lego brick for our tech stack, and since then we've been adding multiple other pieces, most recently stable pools, which we then submerge the shares into the Omnipool, allowing you to do trades between multiple types of AMMs in a single go. So yeah, really interested in DeFi as a whole. So looking forward to having this conversation with you all.
Thanks, Ben. Definitely appreciate some of your insight on what HydraDX is about, and looking forward to talking about more tips. For those of you that don't know me, I'm Jay. I'm the business developer at Beamswap. We're a DEX on the Moonbeam network. We host things from V3 concentrated liquidity to V2 pools as well, and we also have our latest feature, BeamX, which is a perpetual exchange on the Moonbeam network, and the first perpetual DEX on Polkadot. So that's it for introductions, but I would love to kind of go around the table and just kind of hear about some of your guys' early experiences in DeFi. So let's go ahead and start with Luke.
Yeah, so I started using DeFi during DeFi summer back in 2020. I don't know if any of you were around using DeFi then, but it was quite an exciting time. Compound V2 just launched in May 2020, and that was probably my first introduction to yield farming, where you could earn the CompGov token for actually providing liquidity. And it was a really awesome experience because, you know, for the first time, you could actually earn money by participating in DeFi. And the cool thing about it was people were experimenting with money Legos. I remember I had a strategy where I discovered that I could create my own custom liquidity pool on Balancer, which is a DEX on Ethereum mainnet. And I figured out I could put compound collateral tokens in that pool. So that way I could earn like a lending yield as well as earning Balancer tokens for providing liquidity on Balancer. So I could stack my yield. And that was pretty exciting because I could take like the 20% APR I was making on my compound loan, and then I could like stack an additional 20, 30, 40% APR for being a DEX liquidity provider on top of that. And I thought that was really cool, and it showed the power of like money Legos, how you can compose strategies in DeFi that use multiple protocols together, and that was really exciting. I don't know about you, what was your experience?
Well, I mean, for me, getting into DeFi a couple of years ago was just rather interesting because it was like a very exciting frontier. It's still a very exciting frontier, but also, it could also have been very daunting for a lot of, people that were just getting involved. I mean, if you look back to where we are, from, take a couple of years back and kind of look at the amount of resources or not knowing who to reach out to, how to get involved. It was a very daunting experience, but fast forward to today, there's a lot of amazing teams putting together amazing resources, as well as content creators, as well as amazing ambassadors that are really putting out content there to help make this an easier place to navigate. So I think that's really exciting now, kind of where we're at. Really, really excited for how things continue to develop and how people continue to help bring people into the fold. So Ben, let's go ahead and hear about your experience in the DeFi scene, like how you got involved. Would love to hear a little bit about that.
So how I got involved was really, I sort of first started getting involved with crypto through just ordinary investing, like with stocks and shares and things. I found a few crypto related projects that were listed in the UK. So that sort of like started me digging around and finding out what's about, and then obviously started onboarding some cash into cold hard crypto, and then started playing around sort of at the peak bull market. Just missed out on the Hydra LBP, came in before like the crowd loans, but some of the, I say best, I guess worst DeFi experiences I had were like with the whole spell and Danielle Sister's time and all that jazz with the rebasing the Ohm Summer. And I remember there was they launched their ICE UI, and they'd messed up the UI, so the APRs looked massive. So I remember sold a bunch of don't kill me. I sold a bunch of DOT. I think it's like $55. Swapped it for like Bitcoin and ETH to put into this LP. Paid like or something like $1,200 in gas, and then got wrecked on impermanent loss within a few days. It was so bad. But yeah, that was some of the golden times in the peak bull market.
Yeah, no, for sure. TP, go ahead and tell us a little bit about your introduction in the DeFi scene.
Yeah, pretty much similar to Luke, actually. Taking part in DeFi Summer, with the liquidity mining and just playing around with that. And I just thought the whole experience was obviously quite exciting. It was a bit of a frenzy as well. But I think the potential of what was coming out of it was very interesting to sort of be part of that frontier in terms of experimentation. I do think the idea of the added advantage of obviously the rewards in liquidity mining was great as well from a financial point of view, but it was more about how this was sort of a first stepping stone to, the money Legos, the composability of what what DeFi can bring. So it was more of an exploratory phase. Making a bit of money, losing a bit of money, but it was more for fun than seeking any sort of profit or whatever. There was no real strategy in it. It was just more about playing around and exploring and seeing what can be done.
Yeah, no, absolutely. Like you said, very, very exciting times, kind of a more of an exploration phase, especially into the new frontier. So it was definitely very interesting, and there was definitely a learning curve for a lot of folks. Aziz, mind telling us a little bit about your entry into the DeFi scene and your experience?
Yeah, sure. I mean, back in 2015, 16, that's when, DeFi was really just starting, right? I think for me, as in, it was more of like a sort of like a idealistic sort of like entry, because after reading the white paper of Bitcoin, which was like 8 pages, right? I mean, I fully sort of like immersed myself in the industry. And I was really attracted to the ideals of like decentralized finance, right? Because like first time you could really have true absolute ownership of your money, right? Because in traditional finance, you only have beneficial ownership, right? I mean, because if everyone had absolute ownership of your money, there'll be bank runs, right? So, DeFi was basically an alternative monetary system that really appealed to me, and that's why I into it quite early, right? And back at that time, the first few dexes was like Ether Delta, which was a very OG DEX, right? And obviously it's ultra complex, right? You talk about non-custodial environment as well as like an order book setting, right? It's like double whammy of complexity. But after Uniswap launch, after the entire industry sort of like moved towards simplicity, like you can see, right? Where swapping is very easy. The user experience has improved drastically. So I think, as everyone in this round table, I think is focused towards abstraction of complexity and making things very easy to onboard new users. So I think this is a very important and very exciting time for us to be at, where we really sort of like very close to being potentially at the nexus of retail or mass participation.
Yeah, no, absolutely. I mean, like I said, looking back at where we were a couple of years ago to where we're at now, the landscape's changed drastically. The user experience is definitely a lot better, but there are also quite a few things that more complex ideas that are also coming out as well, and kind of how things are starting to compose on top of each other. It's getting really, really interesting, and I'm very excited for what's to come. But I kind of want to go ahead and pivot over here and kind of ask you guys for some tips on some of your best practices for engaging with DeFi apps. Would love to kind of hear some of your experience on how to interact with protocols safely. Yeah, Luke, go ahead and take this one.
Sure. Yeah. There's a few things you can do to be pretty safe. One is it's always a good idea to use a dedicated computer for DeFi if you can, or a dedicated mobile device. I know it's expensive, but if you think about, you're using it for your financial, your financial interactions, losing money could be devastating. And having a dedicated computer means you don't necessarily have to worry about, other software you use potentially stealing your private keys or doing anything malicious. So having a dedicated computer is great, but also I like using wallets like Rabi that allow you to simulate transactions before you sign them. So this is a pretty powerful feature because you can actually see what your balance changes will be before you execute a transaction. And so there's been, I think once or twice, it's totally saved me. I think one time I remember I somehow clicked on a site that was like a Bored Apes Yacht Club NFT stealer, right? Where it tried to approve transferring a Bored Ape out of my wallet. And Robbie immediately told me like, hey, this is if you sign this thing, it's going to take an NFT out of your wallet. And that's really powerful. You can just reject the transaction if you see something that you don't expect. So simulating transactions is a really powerful way to protect yourself. Not all wallets support this. I know it's something MetaMask has been looking at adding for years now, but they've somehow never shipped it. But I think a lot of wallets will have this in the future.
No, I think that's great. Definitely an interesting feature. And obviously, yeah, there's a lot of wallets out there, and kind of trying to figure out which one fits your needs is one of the things that users have to navigate, and also support is kind of another issue. But I think the amount of wallets out there now that have amazing utility and different use cases for different users is amazing. And what are some of your tips for people doing their own due diligence to interact with DeFi applications safely, or what they can do to prepare themselves to best protect themselves?
Sorry, was that to me?
Yes, sorry.
Sorry, mine, slightly pessimistic perhaps, but from my point of view, I initially just assume everything's a scam. I take a really defensive view on DMs, messages, links, anything. If I want to interact with a protocol, I'll always go and triple check the links first. So go to a trusted source, something like for example, if I was trying to find the Moonbeam DApp, right, I would go to the Moonbeam X account and I would click on the links through there, check against any bookmarks. If I use a protocol a lot, I'll just bookmark it so I know I'll get the right link, and just don't ever click anything sus. Don't assume that anybody wants to get in your DMs and interview you or ask you questions or anything like that. If you shut pretty much everything down and act super defensive first, then usually you can give yourself time to reflect on it and ask yourself, does this make sense? And also with the FOMO thing, if you see any sudden unexpected announcements of, oh, do this and you can get this really quickly, or hurry up now, and there's been no pre-announcement of an announcement, then chances are it's a bit of a scam. So steer clear of anything that insists you do urgency.
Yeah, no, absolutely. I mean, we're all very familiar with some of the things that kind of pop up even on X, like massive airdrop announcements, asking users to participate in this. So it's definitely something that people need to be mindful of in order to just protect themselves, and just making sure that they're going to the official supported sites and double checking links. And I think one simple tip that you gave is making sure that you're bookmarking the appropriate site. TP, what's some of the advice that you have for users to also navigate DeFi safely, doing their own due diligence, making sure that they're doing everything they can to protect themselves?
Yeah, definitely. I mean, I completely confirm what Ben was mentioning in terms of taking the defensive approach. I mean, if you are referring to some sort of like conducting a due diligence, which it sounds great on paper, but obviously you then have to have the patience to do so. But I would first try and maybe go to understanding what exactly the DeFi protocol is doing from a design perspective, just to know exactly what you're looking into. I always think sort of the project documentation is a good way, guides you through the protocol, as well as brings you to like the core information, specifically around audits, which I think have to be looked at in a bit more detail, in terms of like the audits done before deployment, whether they're in progress, the casual reviews, are they, done just like that by one party? Do these auditors have some sort of credibility? Have they done tests over tests over tests? Has version 1 been around for X amount of months? So I think there's a various amount of due diligence that can be done within a specific subset, in terms of audits. But I would definitely say that one good thing as well, if you are going to go down that route, is obviously looking at the team behind the project sometimes, potentially the backers, maybe some sort of the angels as well, which have some sort of track records. And I do think, even going on, CoinGecko, seeing if the project is even there, and maybe sort of assessing its TVL and its returns, and whether they're somewhat reasonable to relatively similar projects. So yeah, I mean, that's another angle you could also take, aside from just the Twitter and checking all that stuff out.
Awesome. Yeah, no, thanks, TP. No, that's some great advice there. Aziz, what are some of your tips for users to do their own due diligence prior to interacting with DeFi protocols? Would love to hear your take on this as well.
Yeah, so aside from the comprehensive views that the rest have just talked about, right? A good sort of like a shortcut, for credibility would be going into the ecosystem pages of the blockchain project. So, for example, right, on Moonbeam, right, you can, since Moonbeam is basically the L1, you can easily go to Moonbeam and look at the list of projects that is supported or that's built on Moonbeam. Right? So automatically there would be a degree of credibility because, the ecosystems would have done initial DD on the projects to be whitelisted on the project page. So that makes life easier for you to have a look at the list of projects that are there and then validate them with, for example, DeFi Llama in terms of TVL or volume, so you can see which are the most popular ones. And if you're like a first-time user or quite new to it, obviously the learning curve is much higher, and therefore it's highly recommended that you stick to like blue chip protocols, right, or protocols which are widely known. And from there, just explore your way and always be, because this is a very complex space, right? So scams will always occur, right? So make sure not in any possibility to share. It's a very common thing, right? Phishing schemes, to share your private keys, right? So if you come across any websites or people asking for, your seed phrases or stuff like that, obviously, although we as natives, this is like this is quite common sense, but I mean we come into cases like this very frequently. So yeah, just bear in mind that.
No, absolutely. I think a lot of you also provided some amazing insight. I think just kind of to reiterate, like Luke said, making sure that you're using a dedicated device kind of helps limit some of the pitfalls and things that can happen with having various software on your device. So also making sure that you guys are looking at the official pages, like TP said, not giving into FOMO, or like Ben said, making sure that we're also watching out for sense of urgency for certain things like airdrops, things like that, and really just taking the time to be patient, look into these pages, do your own research and due diligence. And I think one of the things that I would also recommend is, as you guys are also doing your due diligence and going through the appropriate pages, also getting involved in the community, and also just talking with some of the development team as well as some of the community moderators and the community to also kind of get a feel to get a better understanding of the platform prior to using it. So next, I kind of want to shift it over to Ben to kind of talk a little bit more about some of HydraDX's current features that they have. I know you guys have the Omni Pool. You guys recently did L bonds, and you guys also have tools like Auto DCA.
Yeah, so as I mentioned earlier, the Omni Pool was sort of launched January of this year, and that was considered sort of like the V1 training wheels of HydraDX as a all-round DEX. So there are many ways you can obviously increase capital efficiency for users who want to swap between assets. Obviously, increasing liquidity is one of those. Concentrating that liquidity around certain prices is another one, which we've done with the stable pools, which we've recently launched. But another way you can do that, you may have also seen it from ThorSwap with their streaming swaps, they called it. Essentially, you can schedule your trades rather than just executing them immediately. You can schedule those to be broken down over longer periods of time. So either fairly rapidly, so if you just have seismic size and you don't want to get a big slippage when you're doing your trade, you can break that down perhaps over an hour or two, so that arbitrageurs can sort of reset the price in between your swaps, so you get generally a better price execution rather than hitting the price hard and then leaving a nice juicy fat arb for somebody to come and clean up. You can actually reduce the impact of that on yourself. And also it pertains to sort of more generalized investment behavior, where people like to invest over every week, every month, every couple of days, or whatever it is. You can sort of schedule those in advance. So we have that functionality in place. You mentioned bonds. Yes, we recently did a bonds event as part of the Great Dot Unlocking. So those were HDX, which were locked up for a period of 1 year. So they have a fixed maturity date, and then those were sold using LBP. So that's a liquidity bootstrapping pool, which essentially algorithmically shifts weights between two assets to a target towards the end. And essentially it just puts a lot of downward pressure on the price to sort of push back against whale buying or bot buying at the start of a ICO or something to that effect, and incentivizes you to sort of like break your purchases down over time into smaller pieces. So just constantly adding these small Legos in order to make the product more usable and achieve better pricing for all users.
Awesome. Thanks, Ben. So Luke, I noticed that Moonwell, also has, several links to various dashboards from like Gauntlet, Ward, and ITB. How can users leverage these dashboards effectively with the information that they have, and what sort of information can they gather from utilizing these dashboards?
It's a great question. So these dashboards allow you to do a lot of things, like see what kind of risk exists in the current markets. And when I talk about risk, what I mean is primarily economic risk. So if you think about economic risk and money markets being the main risk being like, so people can take out loans that are very close to liquidation, and if the price moved too quickly, then it could cause people to get liquidated really rapidly. So understanding there's a metric called value at risk that you can see in the Gauntlet dashboards, and that's a really good metric to look at. But I would caution you that it's normal to have some value at risk, but the real metric that's dangerous is liquidations at risk, meaning the liquidations might not happen successfully. So value at risk is something that Gauntlet uses to kind of calibrate their recommendations for our community that they put up through governance proposals. And then liquidations at risk are sort of like the more severe risks. But there's a really good dashboard I would recommend using if you want to kind of simulate market events. So Warden Finance has a really nice dashboard that lets you do liquidation simulations. So you can say, I want to know what happens if the price of Glimmer drops from 21 cents to 18 cents. And you can actually simulate like, okay, what will happen? Who will get liquidated? Will the market still be healthy? And that's a really powerful feature for advanced users if you want to just simulate various market conditions like black swan events and things like that to see if the markets are still healthy. And obviously these are just simulations because you're trying to estimate what thousands of human actors will do in a market condition. And people are human, right? Or humans are people, so they may not act rationally during market volatility. So just keep in mind these are simulations, but it gives you the powerful tool to actually simulate market events and sort of test what might happen in various market events, which I think is pretty powerful. And then one other thing I just wanted to mention really quickly, I really do think it's a great approach to kind of when you're doing diligence on a protocol like Moonwell or like a DEX, is to look for the audits like someone mentioned earlier, but also you can look at the contracts themselves, and you can see first of all, are these the same contracts that were audited? That's really important because some projects actually update contracts without getting them re-audited. We're really careful in the Moonwell community to never deploy contracts or changes that haven't been audited. And the other thing you can check is for admin keys on the contracts, right? If the contracts are controlled by a governance DAO, that's a really good sign that it's decentralized and that no admin can rug you or steal your funds unilaterally. And so, you should check all the projects you interact with, make sure that there's no admin keys, hidden there.
Awesome. No, thanks, Luke. I think that's really some powerful tools that can kind of provide some insight to help users navigate better and get a better understanding of kind of what they're interacting with prior to executing it. And really appreciate the clarification there. So TP, kind of want to talk a little bit about, just some of the benefits from traditional staking to liquid staking and the opportunities that kind of unlocks.
Yeah, most definitely. I mean, on the liquid staking front, we've obviously seen the prominence of liquid staking, right, since post-Shapella. So there's obviously been a rise there, and the utility, and I guess the demand for these assets have grown significantly. So we definitely think that, with more and more use cases and, the interoperability of these assets, we're seeing sort of liquid staking assets becoming really important prime assets within sort of lending and borrowing protocols. And we're seeing some interesting stable coins as well. So I'd say, the most important factor, I think, with the liquid staking piece is really the opportunity that it unlocks rather than the capital constraints of traditional staking. I also think that, there is a value add in terms of how delegations are sort of optimized. So you can potentially have a higher staking, yield versus traditional staking. And then there's also, once again, the additional opportunities and the added yield within DeFi. And that's something that we're trying to work I think our focus at Bifrost is really around that. We are a dedicated liquid staking protocol, obviously really benefiting from the structure of Polkadot and XCM. And we're trying to make sure that XCM is a key feature to our solution. And part of that strategy is to make sure that, we have use cases across the ecosystem. And that's really why we've really pushed around the unlocking to having, VDOT natively on key protocols like Beamswap, StellaSwap, and then, later down the line when we have, significant liquidity and we have some sort of maturity there, we can then activate some more compelling use cases where there is demand for using yield-bearing collateral in DeFi protocols like Moonwell, Prime Protocol, etc.
No, absolutely. And also just wanted to say congrats on the announcement for like VDOT governance as well. Really cool stuff, TP. So I'm going to go ahead and kick it over to Aziz here. So with things like DeFi and stuff, I know like slippage has also been one of the bigger issues. But I know that both of our platforms are now supporting concentrated liquidity, and I would love to kind of hear your take on the benefits that concentrated liquidity provides for users in the DeFi space.
Yeah, sure. Good question. I mean, compared to V as in the previous version of standard AMM, right? We call it V2. It's inefficient because, for example, your funds, your capital is deployed across all price ranges, right? So if you look at a centralized exchange, if you look at the order book, right, there's a bell curve shape because most of the liquidity is centered around the current price. So concentrated liquidity tries to mimic that bell curve, right, of a centralized exchange, which is obviously very, very efficient, right? And that's why, on a concentrated liquidity model, it's multiples more efficient, like 10x more efficient, for example, right? So $100 million worth of liquidity in a standard V2 AMM could be worth 10 million, only 10 million 10 million level of liquidity is needed for the same amount of slippage, right? So that shows the efficiency counter, and that is something that we've sort of like focused on since at the start of the year. We transited to concentrated liquidity at the first quarter because we needed to make things more sustainable, right? On a V2, you need a lot of incentives and rewards to attract liquidity, but transiting to concentrated liquidity model, as you can see in StellSwap as well as Beamswap, you can see that the APRs are much more sustainable because it is mostly driven by trade APRs, right? The trading activity. So that is, I think, one of the most important evolution of decentralized exchanges. Moving from a standard AMM to a concentrated liquidity AMM that requires much less capital requirements for the same amount of slippage. Now, for I think a good, because on Moonbeam there's like StellSwap and Beamswap, and we use different concentrated liquidity mechanisms and infrastructure, right? So as a new user, if you really, really want to get the best prices, right, the lowest slippage trades, I would really recommend you to use an aggregator like BrainDex, for example, right? Because they are connected to all as in all the DEXs on Moonbeam. And therefore, whenever you make a trade on an aggregator like BrainDex, what they do is that they split your order into various chunks so that you always get the best prices across different trading venues. So that's a good tip if you're just starting out and you want the best prices for trade execution.
No, absolutely. I appreciate you shedding some light on that. And yeah, big fan of the team over at BrainDex for helping route trades and being a DEX aggregator for the Moonbeam network. Really appreciate that. So I know there's also we have a question about native USDC and some of the approaches that can bring. Luke, what's really exciting about the about native USDC coming to Polkadot?
Yeah, so native USDC coming to Polkadot is pretty exciting because it will allow us to do a couple things that aren't quite ready yet, but should be pretty powerful. So for one, Circle is bringing this new protocol called Circle CCTP, or Cross-Chain Transfer Protocol. I think that's what it stands for. Anyways, that protocol allows you to basically deposit USDC from anywhere, any network that is supported, that supports Circle CCTP, to any other network. And so what that will really unlock for us as a community and Moonbeam is that if people have USDC in their wallet on Ethereum, mainnet, or some other network where USDC is native like a layer 2, they should be able to deposit it into an app on Moonbeam with just a single operation. And so we don't have this ready yet simply because CCTP has not yet integrated on Polkadot. But once that's enabled, we'll be able to deposit USDC from anywhere into apps with a single operation. So that's pretty powerful. I think the challenge with CCTP on Polkadot is just that it has to be integrated into Substrate, right? Because it can reach all of the parachains and not just Moonbeam. So we need to wait for Circle and Parity to take care of that integration first. And then that will also unlock the ability to withdraw USDC to Moonbeam directly from central exchanges. So that should be a pretty powerful feature as well. But yeah, looking forward to CCTP integration. It should be a big unlock for us. Unfortunately, without CCTP, there's really no way people can get USDC natively on Moonbeam today. So we're just kind of waiting for that to happen. Our community has already launched the USDC market on Moonwell, but it's currently just sitting there with no liquidity because there just isn't a way to get USDC liquidity yet.
I'm not sure if we cut out there, Luke.
I'm still here. I just finished my question or my answer. Can you still hear me? Yeah.
Yeah. No, sorry. Yeah, just double checking. Sometimes there are some issues with X. So I guess another general question I'd like to ask is what are some of the tools that you guys utilize to for portfolio tracking and managing your DeFi portfolio? TP, are there any tools that you utilize to manage and track your portfolio? Would love to kind of hear what are some things that you use to keep track of those things.
Yeah, I think my days of being a DeFi degen have changed, but I still sort of use things which I think come with key attributes and add value. So I mean, the things I look for essentially are really censorship resistance, that these tools are permissionless, they're obviously transparent, interoperable, and more importantly, non-custodial. So I mean, I use things like dbank. I look at the Nansen portfolio management tool as well, the tracker. But I definitely think that the DeFi portfolio trackers are quite important, specifically around holding, tracking your holdings, your positions, all in one concentrated sort of UI. And the real reason there is just for instant sort of real-time updates on the performance of the assets, as well as P&L monitoring. So, I mean, that's pretty much what I use and why I use it.
Awesome. Ben, is there any portfolio tracking tool that you tend to utilize to keep track of your DeFi portfolio?
I mean, I'm a little bit more out of touch more recently, a bit more dinosaur. I used to keep my nice little Excel spreadsheets because I'm an Excel boy. I also used to, in more bull market times, use Zapper, which I thought was pretty cool to keep track of that. But more recently, just in terms of portfolio, keeping an eye on it, I quite like the Talisman dashboard. It is a bit buggy, needs some love to be a full-fledged, really usable product, but it looks good and sort of can keep track of obviously all your EVM assets as well as everything that's on the Polkadot ecosystem. But yeah, I think we're somewhat lacking in tooling and analytics and stuff for a lot of that stuff.
Gotcha. No, appreciate you for sharing. Aziz, is there anything that you utilize to track your portfolios, or any tools that you recommend for users?
Not really, because TP just mentioned dbank. I think dbank is probably one of the most popular ways for you to manage your assets across different blockchains. So I think, usually that is used.
Gotcha. And last, Luke, is there anything that you utilize to keep track of your portfolio, or anything that you recommend? I know a lot of people here probably utilize dbank. I know FiDi is another good option as well to kind of manage and track your current assets.
Yeah, I use dbank as well to track my portfolio. It's really great. They seem to have support for almost everything. Another tool that I use, which is, if you've ever had to do taxes on your DeFi positions, you know how much of a pain that is. And I found that Zerion, which is like a web wallet, Zerion has a really nice feature that lets you do a CSV export of all your transaction history from various networks. And that was actually super useful for doing taxes because it makes it more human readable. If you're just looking at like Moonscan or Etherscan, you're probably looking at all these transactions and it's really confusing and hard to remember what you did last year. But Zerion is a really nice tool for doing an export that I can just give to my accountant when I need to do taxes.
Yeah. Awesome. No, thanks everyone. Really appreciate you guys for sharing that. So for the last question that I have for everyone here on the panel is really more, what are some tips that you have for just people just trying to get involved in the space if they're trying to start their entry point of the DeFi journey? I'm going to go ahead and kick it to Ben.
Well, first of all, you probably want to follow the accounts that are on here. I think that pretty much encompasses the broad spectrum of DeFi in this ecosystem. The great thing about this ecosystem is generally with fees being as low as they are, you can afford to experiment a little bit more than you could on Ethereum mainnet. So you don't have to bet the house in one go. You can just play about and get into things. It's obviously, with market conditions having been how they were, it's relatively pretty quiet around. And I think we're fairly early still on the Polkadot DeFi movement as a whole. I think broadly outside, a lot of people aren't really aware that there is much of a Polkadot scene for DeFi. It's still commonly gets referred to as a dead chain and the likes of that. So I think people will be in for a surprise as things really start ramping up, especially if you listen to some of the guys that are on here today. There's some really exciting tools to be able to have a play around with. But broadly, get around, follow the accounts that are on here, follow the DeFi guy. Who's I can see is listening here as well. He's always chatting stuff on X about DeFi in general. But yeah, just get involved in the conversation and yeah, let's start a bigger movement.
Awesome. No, thanks, Ben. Really appreciate it. Aziz, what's some advice that you have for anybody looking to just kind of dive into their DeFi journey?
Yeah, sure. Number one, get a hardware wallet. So that should be your first sort of like point, right? Getting a hardware wallet, setting it up, and then so that you can interact with on a wider DeFi scale, right? Secondly, I think financial literacy is one thing that a lot of people in crypto and DeFi is kind of lacking, right? So I think it's very important for people to understand their risk tolerance, from a financial point of view, and don't sort of like immerse yourself in the degen culture, because this is actual funds, right? As in, so it will be good for you to really understand your risk profile to see how much you can actually lose, and then distribute and try around DeFi so that you could have a look and just experiment with a lot of the protocols, with a lot of the opportunities that's currently existing, and just have a feel of things before you go like really really deep, right? So yeah, exposures. A good exposure to stable coins, and then the other, and then other volatile coins. So I think that is something I would advise a lot of people to be very cognizant on, to be really as in tune with your risk profile.
Thanks, Aziz. TP, what are some of your tips for just a new user getting ready to start their DeFi journey?
Yeah, I think Aziz has summed it up really nicely. I definitely think, given market conditions and where we're at sort of in the cycle, everybody has time to sort of sit down and understand sort of the different narratives in DeFi, the different sort of, I always call blue chip protocols which are out there, which have survived various cycles, who are generating revenue and fees, understand what they're doing and why they have market share. And then from there, understand sort of the technical aspects around, what are AMMs, what is impermanent loss, and try and build an understanding of these different concepts, and then potentially start, I wouldn't want to say play around with it, but try and see where, your interests intersect and where your needs are. And then, start digging deeper. I think there's so many very good resources out there, from sort of the Masari sort of researchers, which are a bit more institutional, to things like Token Terminal, where you get, very good sort of metrics on different protocols as well. And there's also Crypto Twitter. There's a lot of really, really good guys with very little following who are doing really, really good stuff in terms of threads and educational work. So I would really say just dive in by first sort of being curious and understanding and having a basic understanding of everything, of concepts, and then getting your allocation and getting sort of your exposure to different sort of niches within DeFi, with your risk appetite, risk profile, and what you're willing to sort of have exposure to.
No, I think that's some really great advice. Luke, would love to hear your take on this as well.
Yeah, thanks. There's been some really good advice from Aziz and TP already. I think I definitely echo get a hardware wallet, like Ledger or something to start with. And then I would also say one good way to be safe when you're still experimenting and learning is to create a new wallet. If you have a hardware wallet, you can create multiple wallets that use the same hardware. So just create a new wallet that's isolated from the rest of your crypto portfolio, so that there's no risk to anything else that you have. And I like to recommend that people just start with small amounts of money, like even $5 or $10, because if you're transacting on a low cost, low fee network like Moonbeam, you can actually create a DeFi portfolio with only $10 worth of funds. You could start with some Glimmer or some DOT or some stable coins, and then experiment with protocols like Moonwell, like StellaSwap, like Beamswap, stake some DOT on Bifrost. Just experiment with these protocols. It's with small amounts. And that way you'll be able to actually track your performance over time, and you'll be able to see if you're able to grow your portfolio. If you can grow a $10 portfolio from $10 into $20, then you'll gain the experience necessary to grow a $10,000 portfolio into $20,000 because things scale up really nicely with DeFi, especially in a low fee environment like Moonbeam. So I just encourage people to start with money they can afford to lose, and then you won't feel bad if you experiment and you lose a few dollars. So that's my recommendation. Of course, not financial advice. Please do your own research.
No, absolutely, and I think a lot of our speakers here gave some great insight into kind of navigating the DeFi scene. I think one of the best things that you can ever do is if you want to get involved, just start. There's no better time to start than today. Also, making sure that you guys find when you're looking at things, find something that really interests you. I think TP really hit that point. Find something that you're really passionate about and really interested in, and then I would say doing your research, learning as much as you can from the platform, getting involved with the community, and and to reiterate what you said, Luke, is start small. It's not a race. This is your journey, so do everything you can to learn and grow. But I did want to say thank you to all of our amazing speakers that we have here today. Thank you, Luke from Moonwell. Thank you, Aziz from StellaSwap. Thank you, TP from Bifrost. Ben from HydraDX. Definitely be sure to get plugged in with all of our teams. Give them a follow, and also get into their communities. So thank you again for everyone attending. Once again, I'm Jay with the Beamswap team. But yeah, definitely get involved and see all the amazing things that Moonbeam and the Polkadot ecosystem have to offer. Thank you.